A war can move Forex, but sometimes the ceasefire moves it even more. Because the market doesn't just price the conflict, it prices the risk of the conflict continuing. And when that risk suddenly falls, positions can unwind fast. Here's what actually happens. First, the risk premium comes out. During a geopolitical crisis, traders price in uncertainty. Oil rises. Safe haven demand increases. Investors reduce exposure to riskier currencies. That's already happening around the current US-Iran tensions, with oil recently jumping as hopes for a diplomatic resolution weakened. Now imagine credible ceasefire news hits. The market doesn't wait for everything to be fixed. It starts removing that risk premium. 2. Then oil can reverse. This is where Forex gets interesting. If traders expect a ceasefire to reduce the risk of supply disruption, oil can fall sharply. And that changes the inflation outlook. Lower energy pressure can mean less inflation pressure. That can change expectations for central bank policy. So suddenly the chain becomes ceasefire to oil down to inflation expectations, down to rate expectations, change to currencies reprice. This isn't theoretical. Earlier ceasefire announcements in the current conflict were accompanied by sharp moves lower in oil and the dollar. 3. Then the safe haven trade unwinds. Here's the part most traders miss. You don't need investors to suddenly become bullish. You only need them to become less afraid. That can mean unwinding positions in defensive assets and rotating back toward risk-sensitive currencies and markets. And because those positions can be large, the reversal can be fast. 4. But don't trade the word ceasefire. This is critical. A headline saying ceasefire isn't automatically bullish for everything. The market cares about credibility. Does shipping actually normalize? Does oil supply risk fall? Do yields respond? Does volatility fall? If the ceasefire looks fragile, the risk premium can come straight back. And that's exactly why the market can reverse twice on the same headline. The mistake is watching the war itself. Watch what the war is pricing. Oil, risk premium. Yields, safe haven positioning. Then ask, what gets unwound if the risk disappears? Because sometimes, the biggest Forex move isn't when the crisis begins. It's when the market suddenly believes it might be ending. If you want more videos that explain what's actually moving Forex beneath the headlines, subscribe to MarketsVox.